Right, well, welcome everybody to what has been a very eventful week in the lights of DeepSeek and, of course, so much more information coming out about that program and volatility arising in the markets. It just shows you why 2025 is going to be one of those market years that you will need to be paying attention to and, of course, have the right techniques. In today's video, we'll be talking about everything from the key levels that we spotted during this event and, of course, how we did so. And then we'll break down some great technical analysis tools that you can use throughout 2025. My name is Thomas Atkinson, and as always, I'm joined by Tyrone Abella. Tyrone, what a week we've seen so far, completely down and then pretty much making back about 50% of it in a few days. It was pretty wild.
Quite amazing. Welcome, everybody. Yeah, look, it's been one of those weeks, but I think it's just, signs of things to come really for the whole year. I think probably, a recovery. Look, I think probably to touch straight on the S&P 500, I think that even though it sold off very heavily on the day, its recovery candle by the end of the day was very, very positive, I thought. And realistically, look, the market reacts to news sometimes a little bit, not carelessly, but probably a little bit quickly. And then I think by the time everything, but when after all was said and done, it recovered 3/4 of its loss, and it's continued to obviously gain ever since and nearly closed the gap. So I think that it's just a volatility sign that we're going to see a lot of this year. I think we called it last year. We said it's going to be a rough ride in 25, but hey, a rough ride doesn't necessarily mean you can't trade. I think it's actually better for trading because you can get in and you can get out. And if you know the key levels to look for, I think you can get some very quick trades. And I think sometimes, as we know, Tom, volatility gets you in and out of trades even quicker.
That's right. Yeah, volatility can get you in and out very quickly, and that's great, especially when you're using program stuff like CFDs and stuff that Pepperstone obviously offers, because it means you can get in quickly and you can make those snap decisions if needed with the type of instruments. Let's now talk about the US 500 though, because of course this was a key level. It's actually something we've discussed a lot in our own shows, and we've even talked about it here when it comes to the downward trend line last week. So we discussed the idea that if the market was to come back, that there will be a few key zones. And I think the number one thing to take away straight away here from today's session is always have levels planned, that if something out of the ordinary happens, you're aware of what's going on in those zones. You'll often see that I mark out and Tyrone marks out key levels. And the reason we do that is because if an event like this happens, we're ready for it, we're prepared, and we have a plan. And I always believe that if you have a plan, there's a great chance you'll be successful. If you have zero plan and you're just kind of trying to be, just completely all over the place, you're probably not going to do as well. So how did we get this level? How did we figure out that the 59.50, 59.20 zone could be pretty important? Well, a lot of it has to do with this downward trend line. Obviously, you'll see here the trend line was going down and we broke to the upside, which is, of course, incredibly bullish. We get this bad, talk about that later on, but the DeepSeek news, obviously that pushes the market down and everyone freaks out and it hits back into that level. So number one is that we have this trend line. Number two, we have, of course, a few dynamic moving averages sitting around this level. And we also have a Fibonacci. So if we actually grab a fib, and we're using the futures market here so you guys can see it, and you should always use the fib whenever possible. We've got around a 50% fib straight through that 59.50. Now, because we also have market structure, which is right here, we start to go, okay, well, if the market does tank, where's its most likely first level of buying pressure? Where are the algorithms most likely sitting? And you'll notice here when you look at the structure, you get this kind of hiccup here where it comes up, it sells off. Traditionally, that's what's happened each time. And then it makes a decision to go up. And this is what we call in technical analysis terms a demand zone. The reason we call it demand zone is because market has come up, it's built a level of structure, and then it's broken to the upside. And the way demand works is that if markets do come back down to these demand or supply zones later on, that it probably was a key level that someone entered a big position into. We know it broke to the upside. So what's to say that they won't instigate more buys at this area? And this comes back to understanding how larger traders and larger investors actually get into the markets. We often liken it. Maybe what I'll do here, Ty, is just show everyone what I know they do, which is basically grid purchasing. So what you can see here is we've got a couple of different lines. As price comes down into that area, let's say they want to buy, they'll buy some here, they'll buy more here, and they'll absolutely rip it if they can buy it here, as in they'll buy more here. So they'll they'll be very greedy in this zone. And that's actually how price action kind of works. It goes outside of this box, they stop purchasing, it comes back down into the box, they purchase more here, then it goes out, then it comes down, then they purchase more, and then it moves on. So in essence, that's how price works. They set a range, and that range then becomes the area that they're interested in purchasing. And in this case, that's exactly what was happening here. So the market comes down into this level, and bam, you've got a key zone. This also happened on many other markets, didn't it, Ty? So it happened on the NASDAQ. If you had a bit of a plan there, you can go through and you can pretty much have two levels that you could have focused on. You could have focused on this zone here, which is, of course, demand area, or you could have focused on this massive 20,700. And because this DeepSeek information was targeting semiconductors and technology stocks, we saw a bigger sell-off there. Obviously, the first level, not any purchases there initially. Then we get this huge bounce that comes off. And again, if you had the plan, if you had the levels, then you knew where you were probably going to potentially do some day trading, wouldn't you, Ty?
Yeah, most definitely. And look, obviously the NAS was the one that was, probably shocked the most, obviously, because it's related to tech. But, and I think you're right. Look, when you've got a plan, you've got everything really at your disposal, haven't you? You're never going to really get caught out by the market. Like, were we surprised? It was something that was unprecedented. We didn't know it was coming, obviously, because and if we did, what are you going to do about it until it actually happens anyway? But if you've got a plan of the levels that you think it's going to go to, remember that the market does generally stop at levels that it considers safe, that have been tested and tried before. So that's why it's really, really good, because at some point, it's going to find support, and it's going to find support in a safe zone. And I think that's what that grid does. It gives you safe zones to aim for. Do you automatically buy there? Well, no, of course not. But you are going to look for those smaller time frames, quick moves. And if you go back to a 5-minute chart right at that, say, 20,700 level, you're going to see that turning point happen. And it did happen. So if you were day trading that session, which many of you probably do, you're going to see, what you're going to see is a series of higher highs and higher lows, all the things that we talk about. Could you have entered on that first swing? Yes. Would you have entered after the 20 touch and that swing? Absolutely. And then off it went. And that was in the session itself. That was in the crazy session. So, what's happened after that? That's just been effectively a pretty solid recovery that you could have got in on bigger time frames as well. But in essence, the things that we talk about week in and week out, the basics of trading, understanding key levels of where the market may or may not find support, but also understanding when that level does hold and jumping in on board on a smaller time frame change of trend is the most basic way to trade, but it's actually one of the most effective, isn't it, Tom? And especially for scalpers and day traders who are actually really getting in and scalping these big moves, because that's where you're going to get the most bang for your buck, especially in a volatile market. You don't want to be setting and forgetting positions in a volatile market. This is a time to get in and get out and get in again. So that's just a really basic example of the things that we talk about every single week.
Yeah, and I think the thing here is it was obviously really fast, but Ty, you had to wait. If you bought the dip, and instead of buying the rip, one of the second thing I guess I'd take away from today's session is people that buy the dip, that's a guess. People that buy the rip, that is like a lightning bolt or
absolutely
a supply break or something. What you're doing is you're buying the forward momentum. You're actually seeing that there is an algorithm or there is a robot or something that's actually, or Wall Street or somebody just decided it was a good price, and there's some form of fair value coming into it. And another thing you want to be spotting on these price charts is wicks as well on the higher time frame. So as Tyrone before mentioned, there's been some strong rejections off that area. If we go and have a look at the US 500 here again, you'll notice that by the end of that session day, there's a giant wick. And that bodes generally well for the markets, doesn't it? So that's usually a pretty excited market.
It made the next day a very easy day to trade, really. And it happened. We had a very strong feeling that was going to be the case, because the day previous actually gave us all the clues that the strength was back with the buying. Look, I think that the biggest advice for 2025 that Thomas and I can give you, and this stands true in every year, trading year, but I think especially in 2025, is that you want to take the guesswork out of trading. Now, like Tom said, that market that was going down, if you were buying the dip, that was an absolute guess. And you may have been successful. Look, there's no question a lot of people probably were, but you didn't do that on any technical basis. And is it a replicable system? More than likely not. And I think that's probably the key. You need replicable systems that can play out over and over again. You don't want to rely on luck, do you, Tom? I mean, you need to take luck out of the market. You need signs, and a lightning bolt out of a support zone is a sign that you've put things in your favor immediately, and it makes a big difference.
Yeah, you've got to replicate. The thing is, it's all about having that system that you do 100 times over. No, kind of, you might win, let's say 65 or 68% of the time. You're going to obviously take some losses, and then then what you do is you work on your risk rewards. I mean, if you're winning 2-1 on those systems, well, I mean, imagine how much better that is. And look, things are possible, but the key is to have patience, and then obviously do that reaction, not prediction as much as we can. So did this work, or this kind of concept work, on other coins and other areas? Well, you can see here that Bitcoin, you probably would have had this level of demand, which we've talked about before on the show, 100,000. Obviously went below that, so you would have wanted to see it regain that level. It did so quickly, and at the moment it's consolidating. Now, a lot of people see this and they say, oh, this is a really negative looking chart. You could even make a case for some form of Wyckoff distribution, which is going to be the story, I think, of this year. But in general, this is still consolidating near the peak. So if you look at Bitcoin, you can say, well, it's still holding up really, really nicely. We've got an excited wicks. We've had an excited wick bottom of here, and it's consolidating near the highs. Now, if that breaks to the upside as a day trader, I'm going to be very excited. Like, that's the type of trade that momentum traders get into. And this is actually a really good one to watch this year, see how it plays if you're new or even a intermediate trader or even an advanced trader, because this is a classic setup. Kind of reminds me of gold. So we just jump on over here to gold. And if you take a look at gold, it's very similar. Recent, like previous high, obviously huge consolidation for a long time, and currently consolidating just before the highs. This is the type of thing you want to see. So,
most definitely. And I think that wick that we saw on Bitcoin was a very telling wick. Look, Bitcoin's a very technical trade now. In the past it's been a little bit suspect, but now, you can rely. There's enough volume now that you can actually say, you know what, that's actually a rejection candle, and that pullback above the 20 moving average was key to me. It doesn't look
the
like a
whole
weak
here
chart.
at 20.
Yeah, it does
No,
not
it
look
doesn't
like a
really
weak
look
chart
that
to me.
weak. And
No.
and what if it takes, especially this high over here? That's
Oh
something
goodness,
that you'd
yeah.
want to be pricing in, because
Mm.
all of a sudden you've gone from being lower low to higher high. Okay, well, we could be
Yeah.
ready. We've seen pullback. We could be really ready to go.
Yeah.
Similar case on a lot of cryptos. Ethereum, another one's falling down to 3,000. We know that's a key level. Had that there for a while. Obviously, Ethereum currently in a downward trend. But again, during the volatility, what do you want to be looking at? These key numbers. 3K is a big support. 3K previously purchased. Obviously, there's a decent chance that's going to buy it again. As a day trader, scalp or anything, you got to be ready for those levels and say, okay, do you want to buy Ethereum at 31.40 as it's coming down? I would say no, based on this chart, because the chances are that it's going to hit around that $3,000, because that's really the next level. So remember, a lot of trading is also understanding that there's an equilibrium level and there's another equilibrium level. And the market price will move towards that fair value zone. So once it's moved from one area and it goes on that kind of movement, you see this really quick move, you go, what the hell's going on? It's because it's moving to that next area. So even a classic one of this was actually pretty much the story, which was, of course, NVIDIA. And you'll notice here, it just gets demolished. And you might think, well, it's really good for me to buy 128. It actually opened in the morning below that level. So you're already lower than that. So what is the next most logical zone? And you'll notice here that we have the most traded area. Now, how do we get something like that? Well, of course, we're using a fixed range volume profile. So I guess tip 3 for today, giving a few tips away, but tip 3 for today would be to analyze the market and understand where the biggest volume is transacted. And as you can see here, huge volumes have gone through this 116 to 120 level. I actually already had this one set on the charts from a little bit of analysis a while ago, and you can see I actually nailed that low. And that's not me just making that today or anything. I actually had that there from a while ago. So it just shows you that, again, if you have that plan, if you understand that there's no FOMO, there's no emotion in this. If it hits it, it hits it, and you go on. If you don't, just take the abundance mindset. There's another trade. Now, I would like to ask everyone that's watching here live today, how many times have you thought, oh, I wish I missed that one? And then you get kind of like a little bit little bit excited and you just think, well, I've got to go into it because you get kind of that FOMO or that fear of missing out. And then 2 weeks later, there's another amazing trade that you could have used your money on, but unfortunately, you've got stuck in this trade that you shouldn't have been in, and it's taken away your opportunity. So you really, really need to have that really strong. I think 2025 is about having a strong psychology in the markets as well. So anyway, that's the most traded zone, and of course, what we ended up seeing was monstrous transactions. I mean, the volume was off the roof. You can see here, even if we zoom this out for a moment, that's some big volume. If we look back in history, there's not that many days that even rival that type of volume. And that's just for one stock, let alone how many semiconductors we're seeing similar. So again, have to plan.
It was quite amazing, wasn't it? And I think that being prepared for an event like that, even though you don't know if or when it's going to happen, but being prepared and not panicking, I think is the key. Boy, we're going to give a lot of tips tonight, but not panicking and trying to get involved in something that you don't understand is a trading strategy in itself. So I think we're pretty sure of that. So if it looks, if it's something that you haven't actually done your research on, and you don't know where the levels are, but you see crazy movement, challenge yourself to actually stay away from that rather than actually try to jump in on a train that you don't understand. I'm a really big believer in, focusing on, many charts. You don't have to look at one or two charts. There's plenty of different instruments that you can look at, but only trade the ones that you actually have an intimate understanding of. Don't just jump into something that you've never seen before and think, oh, the market's moving really quickly, let's jump in, because quite often you're not going to have the right analysis done to actually work with that particular stock. So if you're not used to looking at NVIDIA and you haven't got any level set for it, don't look at it and see that it's dropped 16% and just buy automatically because you think it has to return. A lot of people fall into the trap that's FOMO again. I mean, FOMO is one of the things that kicks in. It's a human emotion, unfortunately, that can really take hold.
Well, let's look at the FOMO here on NVIDIA, Ty. I mean, obviously, a lot of people probably bought 128, 126 in the morning, gets dumped down. Take a look, though. You still got the opportunity in the next session. So by analyzing this chart, you can actually see here that we went down to the 118s again in the next session. So that's actually the open down to the sell. The sell then actually swept the low, which is already a pretty interesting sell. Then it rebounded in the beginning of the session. Now, that's a very bullish indicator. So again, reading the storyline is key here and understanding. Yes, we know it's an important level. Yes, we know that there was a decent amount of transactions that were going in near the end, especially. And then we get this huge volume. So the morning came with this massive volume change. And remember, yes, volume is big. We know that's a huge volume for the morning. But what direction is it? Over here, what's the direction? The direction is down. Over here, what's the direction? Direction was down at one point. But by the end of that session, we had a hammer, and then it made a higher high. That's pretty clearly a buy sign for me. And I think that is a very replicable style pattern to be looking at if you use volume with it as well. And you think about, so again, stocks, you can do this on some currencies, you can do this on some commodities as well. If you're seeing a key level tested during high volatile times, and a high vol time is usually a VIX plus 20, a VIX over 20, which it was at one point there, then you see this. Wow, it's a great storyline.
Yeah, I think that tip number 7 for the day: understand candle patterns, understand the candle story. If you get intimate with what this, and I think it's really basic. Look, we've got courses on it, and I know Pepperstone have got videos on it, on how easy it is to actually understand a candle and understanding what it means for a doji candle of that caliber right there. That's a very, very powerful bullish sign that Tom was just pointing out. That hammer candle is an extraordinarily powerful reversal off a level that has already been tested. When you understand candles intimately, if you like, and what they actually mean in terms of how they form, it makes it very easy to add more analysis to it, like levels, volume, and things like that. But it's important to understand in the first place.
Yeah, and
you understand why it's a doji. Understand what a hammer means, really. Understand what a doji means. Understand what a dragonfly or a gravestone doji are. They're very, very important candles, and when you understand them, it goes a long way to really giving you the information you need on the most important indicator of them all, which is price.
Well, let's actually take a look at price here, Ty, and break down maybe some understandings of something that's been stuck in a range for a while, and that's of course silver. So what we've seen with silver is we've had kind of like a low being hit, and it's made a series of higher highs and higher lows, and it's got stuck. And I think this is another one where you're saying read the candles. Of course, we can here. You can see a doji, we can see a rejection candle, we can see a rejection to the upside. If you actually took a 2-day candle here, it would be effectively a doji. And what we've got here, therefore, is an equilibrium, a zone of the market saying, you know what, I'm at fair value, I'm happy with where I'm at right now, but eventually we know that all good things go to another level. So will that be up or down? I don't know. I've got a question mark. I'm going to guess it's up because I'm a bit bullish on gold, so therefore silver should probably come along. But we don't
Everything
know
else
that
is
yet.
going up. Why not?
Yeah, why not? Exactly.
But yeah, 100% though. It is 100% right. I mean, which way will it break? No one could really know that. I mean, we've got a bit of a bias to the long, but 100% correct in that it's going sideways at the moment. It's got very heavy doji candles protecting both levels, the downside and the upside. So while it's consolidating, I actually don't mind silver. I think it's actually a potentially good trade here. But
I agree.
just like we've drawn there, it needs to break the basically that 31 needs to get broken with a daily candle for me to be convinced that it's going long. But I think it's got upside to 32 in a hurry. I think it can get there in quite a hurry if we get that break, because that's the next place of resistance for it. But I wouldn't be totally opposed to actually shorting it if it does break to the downside as well, because I think there's a bit of a movement down to 29 as well. I think it's actually in quite a sweet zone. But again, you've got to be patient and wait for that breakout. Don't try and preempt it or predict it, because that's where you're going to come unstuck. Because yeah, Tom and I have been trading for the best part of 17 years now, and I can tell you both of us have no idea whether this is going long or short. We've got a bias that potentially I'd rather it go long, because that actually plays in with the storyline of what gold is doing and what a lot of the main markets are doing. But there's every chance that it could go short as well, and you need to be equipped with the right tools and the right levels to actually aim for if it does actually break lower, because I think that trade could play out just as nicely as the top one.
Yeah, and you'll also notice that you can actually draw a storyline for both for the break to the upside and the break to the downside. You know, if it breaks to the downside, then pretty much the distance here will pretty much be close to the lows. If it breaks to the upside, pretty close to the highs, and that's what you call proofing. So this is just for the first areas, but yeah, a lot of stuff going on there, and of course a pretty key level. All right, let's go over to a few others now, and we'll take a look here at US oil for a moment. And we know that, of course, this level is going to be very key. Why? Because we've already analyzed it for that. Again, volatility. You know, yes, okay, oil was not the most volatile off this news event. Why would it be? It's a tech event. However, you've still got a level that you're looking for, a level of demand or support coming through. And if you're seeing it short, do you really want to be a buyer before in here? I'd argue not really. So therefore, that you have to wait, and then you get patient in the level, and that's really you get the storyline here. We're looking for a break towards the upside. So obviously, we haven't seen that yet. We're looking at like 75.30. If that does happen, okay, cool, things change. That's when you get edge. So again, being patient in these times of vol, looking for that abundance mindset is really key to volatility trading. And I just don't think we've seen the end of vol for this week or this year or this anything. We've actually got, at the time of this recording, with FOMC, we've got earnings for the big techs. We've got tomorrow another earnings on Thursday. These are big tech earnings.
Big events. Yeah.
Trillions of dollars of market cap, and obviously some big moves that could occur.
Yeah.
Let's
Is
jump
it possible
to the euro
to get some memes? You know what I'd like, Tom, just out of if we can put it to the creators of TradingView, can we have like little memes that we can actually apply to a chart? Because I'd love to see on the oil chart a little dancing President Trump doing his drill baby drill dance, and it might give you a bit of an idea as to where oil might be heading every time you think about that. Because wanting to drill obviously get more oil out of the ground is going to change the supply and demand around the world. So you want to keep little reminders. I mean, I'm joking about the chart, but just remember when you are trading something like, say, oil, that there are bigger things at play than some deep AI. You've got there are actually countries that are being affected by the oil price, and you've got conflicting views of whether there's going to be more oil coming out of the ground. there's a lot to the oil story, and I think that's probably why, in a way, it wasn't quite as volatile. Even though it sold off, it didn't, on a chart, it didn't look that volatile, really, did it? It just looked like it was short. And I think that level, like you said, you'd be very brave to be buying it on the candles that we're seeing right now, because it has, in my mind, it's got another $1.50 before it even hits very strong support. Like I think that there's still a bit to go before it even finds really strong support around that 72.
Okay. I mean, for me, I kind of feel like it could stop here and could find buyers, but again, catalyst there. 70 is also something that could happen. There's a lot of levels down in this area because you got a lot of structure, but you didn't have any
Yeah.
structure in here. That's for sure.
Yeah.
Let's have a
And
look at
remember
that
Tom's
euro.
grid. That's the thing. Well, don't forget the grid, Tom. Like the grid that you
Yes.
were talking about earlier, it's there on about 4 levels. So you apply that grid to oil, and you're going to find levels at 72, 70, and 68.
Yes. Yes. Well, let's have a look at euro here, Ty, because that's come back down to, obviously, we've been talking about this for weeks on the show as well, and we've been bullish on the euro and actually weak on the dollar. This data stats kind of present that story. Again, the narrative is tariffs going to see the dollar to the moon. But what we saw last time was actually dollar weakening post inauguration. Exactly what we're seeing this time again. And we're also seeing price action. So ultimately, it doesn't really matter about the narrative. What is actually price doing? That's the key.
Yeah.
What's the price doing? So we had that candlestick pattern down here. We obviously had the 20 moving average. We since broke that. We've got a 20 moving average here now. We know it was well respected on the way down, including over here. So that means that this level of demand and support plus the 20, that's an interesting zone. That's the kind of level that you want to be setting so that you can then say, okay, well, I'm going to come from the abundance mindset. I'm going to have a look at day trading, potentially this exact zone.
I like it. I do
Yeah,
like. I like the euro. I like it. I think
yeah.
it is a
I
good
think
zone, and I think the
yeah.
upside is quite strong. And also, yeah, going back to just basic TA, it looks like there's going to be a 2050 moving average cross on the daily, sooner rather than later, and that hasn't happened since the euro was up at 110. So yeah, price was actually 110 when the last time these two crossed. Yeah, so something to keep in mind, that even though it's a little bit of a distance away at the moment, the histogram has actually switched to the positive on the daily.
Okay, so that's on MACD, is that right?
Yeah. If we've got the MT4 MACD on it, we'll
Yeah,
see
we
that
can
the histogram has actually switched
daily,
to
yeah.
positive, and it hasn't done that since the euro was trading at 110.
It's a pretty big shift. Yeah, exactly. This hasn't actually happened for quite some time. And the last time we actually got a shift like this was July 24. So that was actually, you'll notice a lot of the time MACD here actually triggers a little bit earlier than the break. But remember, that's okay because MACD triggers, the break occurs, extra confluence. Market then pulls back after the break, which is pretty normal. And then, of course, you end up going on a pretty good rip. In this case, we've seen price action come with MACD at the same time. So again, you have to actually look at this and say, okay, well, yeah, we haven't broken the 106 yet, but tell you what, things still look pretty good.
But when it does, yeah, there's probably a decent move. And if you look at the histogram on there before it came down from 110, you're seeing a head and shoulders on the MACD, and what you're seeing now is an inverse head and shoulders, and that's telling you a lot about price, because there was no real divergence there. That was actually all. A lot of that was actually the MACD behaving in line with what price was doing. So, yeah, I like it. I think that there's a possibility. A little bit of work to do yet, but if it does break past that 105.50 to 16 level on the daily, it could find itself on a bit of a tear.
Yeah, and I think that's going to be a very important point for it. And of course, it takes us dollar naturally, which will be a 106 break below. And this is going to be a huge, huge thing if it does occur. That's really going to signify, okay, we've gone from making a series of significant higher highs and high lows to a lower low. And really, it's going to be difficult for any technical analyst to say, oh, yeah, I think the dollar's in a strong bull market anymore. So we've already been talking about the weakness here. Obviously, we're back at that kind of key turn point, but 106 is the key, just below 106.
Yeah, if it fails here and can't get above that 20 moving average, I reckon there's a big chance it's going to 106.
Yeah, and that's going to be very wild if it gets underneath as well. So as we've demonstrated today, I guess the thing is about volatility, or about 2025 in general, is have your key levels matched so that you're ready for them. whether that be silver, which we haven't actually seen break out of that range, but ready for it. Whether that be potentially gold as well, making the range, or even Bitcoin. At least you have a plan and you've set your alerts. And if you had done that into this volatility event, it may have stood you in really good stead for the US 500 and NASDAQ trades, which were probably the best trades along with NVIDIA this week, so far anyway. Now, that's, it doesn't really matter. The point is that you can always find another opportunity. So don't worry about whatever has been. There will be always a new one. And that's why we always like to look at all these big positions as well, because there's always a build up on something. So we just saw silver, we saw oil, we saw dollar, we saw euro. There's heaps and heaps of opportunities in these markets. It's just about finding those key levels where you have some version of edge. Let's go over to the VIX here, because of course today is about volatility. So the VIX is pretty important. And of course, many people look at the VIX as a fear gauge. Above 20, fearful market. Below 20, greedy market. That's the general philosophy. I think the thing that's key about the VIX is, at least in previous times so far, is we've seen these huge spikes that have been instantly kind of taken away. And that's that buy the dip, what I like to call an animal spirit, these huge bullish kind of revelations people have in the markets. But you've got to remember that pretty much as a day trader or scalper, when the VIX is above 20, I've always got a bit of a rule, and that is that when you get a VIX above 20, you want to be looking more at day trades, more at scalps, more at key zone levels and investments. And when you're underneath 20, you want to be looking more as a swing trader. That's a more consistent technical market where you're seeing those 2 steps forward, 1 step back, 2 steps forward, 1 step back. And the good thing is, for a swing trader, is the predominant period of the market is usually pretty simple. But yeah, the VIX has been going up. Some other little terms or things you can use the VVIX, which is the volatility of the VIX itself, which actually had a huge discrepancy with itself this week. So the VVIX was staying really, really high, and the volatility was quite low. And then bang, out of nowhere, we get this thing. So was the volatility of the VIX was actually correct in this stage, and that's something you can look at. And of course, then there's also things like put call ratios and stuff as well that you can put on charts. So these just all kind of tell you a little bit. It's good to know whether there's fear in the market, isn't it, Ty? And then have a trading strategy you can use for that period of time.
Absolutely. Like we've said many, many times over in a lot of these webinars, understanding the market that you're in and adjusting your trading style to meet that market is extraordinarily important. So, yeah, really focus on the sort of market that you're in, understand that you are in a volatile market, and trade accordingly. And I think that'll, it's not a set and forget time of trading, that's for sure. It's really important.
Yes, it really won't be a set and forget. It's going to be a lot of quicker reactions. I guess we'll finish up here on the show today, Ty, with a bit of a talk about DeepSeek and obviously, what this could mean, because we're seeing volatility now come in to the Chinese market. So if we just have a look here, we'll just use a code here that just demonstrates, I guess, a few Chinese tech stocks. You can see here that all of a sudden there's this huge interest in Chinese tech stocks. Now, DeepSeek, I've looked into it, and obviously I've done the analysis, and I've used other people's big brains to kind of have a look over it and see what they think as well. And in general, I think it is a very important step forward in where we're at in terms of AI. So you have to expect it. AI is moving at a very fast rate. You're going to see several breakthroughs. This could be arguably a breakthrough, just kind of like when you went from your Pentium 1 to your Pentium 2 in some cases, Ty, with computer, and the Pentium 1 was totally useless, or the 486 or whatever you had. So, when you had those computers, they were really bad, the Windows 3.1, and then you went to Windows 1995 or 1998. Now, these were pretty significant steps in the computer world. Obviously, in the AI world, this is a significant step. So I think it's going to be exciting because it's bringing more people in. It's going to allow small companies and middle-sized companies to potentially compete, and that's good for innovation. So what this has also done, though, is it could have kicked off a buying spree into low multiple companies that are in China, saying, well, you know what, maybe China can do some things to compete with the US. And I think that's what the market's doing. So you'll see here, it already was doing it. And the reason I bring this chart up is more just to show you guys that price led the news. So price was already on the improve weeks before, or a week and a half before any of this news came out. And then, of course, it's continued up from that point. We often see this, don't we, Ty? And that's why we say that it's better to follow the price than a narrative. I say if it's in the press, generally in the price. So it's already being processed into that price. And that's why, as technical analysts, we have that edge. You've got edge, be able to see things that maybe not everyone else can see because you're seeing the big money flow. So volume is important. All right.
Absolutely.
Well, guys, I guess we've covered some pretty exceptional stuff here today. We hope you've enjoyed the show. Basically, volatility will be here with us throughout 2025. In essence, I think the 3 takeaways, or something, we've given a lot of takeaways for today, but just remember, always have a plan. That plan generally is going to be your key levels on your charts. Make sure you know where your supply demand, where your confluence levels are, and have them alerted so that if it does happen, you know what to do. And then just remember as well that you want that confluence, okay? So you always want to have as many reasons as possible that are separate. Some of the ones that we use, 20-day moving averages. We obviously use supply, demand, support, resistance kind of concepts, structure concepts, pattern concepts. All these things are good to have in your arsenal. And of course, in terms of a third one as well, is practice that abundance mindset as much as possible. If you miss something, don't go chasing it. Remember, the worst decisions you can usually make are those emotional decisions. So if you can not do that as much as possible, you generally will find that you have a better trading experience and investing experience. Kai, anything else to finish up with everyone here today?
No, I just think that embrace this period of time for what it is, because I think that we saw enough flatness in 2024. So I think that don't be scared of it, just be informed. And I think that's the most important thing. Don't be scared of volatility, but understand how to trade it and be informed. And volatility, can and mostly will be your friend.
Yes, and that's the key. Volatility can be an absolute beast when in the right hands, and a nightmare with the wrong hands. So just keep going, keep improving, and have that plan ready. All right, everybody. Well, from here, from Pepperstone, thank you so much for joining us. Make sure to subscribe down below. Also, click on the links in the description so you can join us live if you're watching this in a replay. And we're looking forward to seeing you throughout the year as we continue to go through these learning courses. Also, check out the Pepperstone YouTube channel so you can see some of the other things we've done in the past on some of the key indicators that we've talked about today, whether that be Fibonacci, volume profile, or anything else. Thanks so much, and bye for now. There you guys.
Thanks, everyone. Bye.